me see your doo-doo brown.
Hey, it's Elaine. This is episode 411 of the Orange Pill Investor. And I'm about a quarter of the way through Jeff's investment grade analysis from last night. And I was inspired. I'm like, you know what? We got to take this to the next level. And so I came up with Dookie hands. That's my contribution. And it is not, I understand that there is a non 0% chance that they may have to kick me out of the group. But anyway, so who is selling? I don't really dig into technical analysis to a certain extent, for the most part, but support and resistance is real, and to the extent that everyone knows what their cost basis is, and everybody remembers where they got in, and so there's emotional attachments to these numbers. I think it's kind of just like a human psychology type of thing. I forget the author of the book, but it was pretty decent. It's called Trade the Trader, and he basically said that you're not really trading the market. You're like trading the psychology of the other investors. And there's a bunch of people here who FOMO the ever living shit out of strategy. You couldn't convince them to buy it here, 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 or here. But okay, yeah, it's 400 plus. Let me just FOMO in at the top. And, all through here too is like, oh, well, it was 550 or whatever. This isn't quite accurate. And there were people who bought the dip. They bought this $400 dip. And then we didn't go to 1,000. And so all of those people remember, they're staring at their accounts. And since December 13th, their hopes and dreams have been dashed. And they've just been clinging in crippling depression to their portfolio. And you have to give them a little bit of credit because they didn't panic sell here. So they just gutted it out. They gritted their teeth and they made it back this far. And so some of these people were never really into the strategy trade, maybe. Or by the time they were finally convinced, it wasn't the thesis, it was just FOMO. So a lot of these people, if your cost basis is 400 or 425, and you can just unshoulder this burden, uh, you know, and get out at a break even. So I think that's what's happening here. I think there's the people that have been suffering since December. And so I don't want to call them, lettuce hands or, paper hands. It's more like wet toilet paper hands. And if you ever try to wipe your ass with some wet toilet paper, you're going to end up having to head for the shower because you end up dookie handed. And so I think that's what's happening here. We got a bunch of dookie hands people that were never serious. And there's a confluence of things too, right? Like Metaplanet is the new hotness. So if you've been suffering through this and you're like, you know what, fuck this, I'm going to take my break even on strategy and I'm going to go, jump into the new hot thing that's blowing up, and maybe I'll try to catch that. And then you know, I'm not saying I'm not saying Metaplanet is right here and it's about to do, it's about to correct. Like Metaplanet could double, triple, 10x from here. I don't know the slightest idea. I hope it does. Because the more Bitcoin that they can stack, that's just better for everybody. But I think that's what's happening, right? So the the market remembers these things, right? It remembers that support was here. It remembers the blow off top. Like all these people that FOMO'd and didn't panic sell, they've at least been rewarded with like a break even. And there's an old penny stock trader that I used to follow named Quick Fingers Luke, and he actually congratulated anybody who could make a break even trade. He said because so many people make losing trades that just breaking even is like a win. Like chalk one up in the win column. I think there was another statistic that showed Robinhood investors blew up their entire accounts within, I don't know, 3 to 6 months or something ridiculous like that. So most people suck at trading. So you kind of can't even be mad at these people if they got in, they FOMO'd in, they got burned, but we're basically just shedding all the weak hands right now. And it doesn't mean that we won't have to shed them all the way back down to 240 again. I have no idea. I kind of think, you know, this resistance here will probably be a nice support level. It would take a little bit to kind of crash down through 325, 350 again. There's kind of a weird thing, like former resistance a lot of times will form support. And so for Bitcoin itself, we need these all-time highs to become support. And we don't have that yet. Like the most recent support level you can find is like there's barely a little bit of support for 103, which is, then there's a little bit more support for 93, and then there's a ton of support for 84, right? Well, there's a ton of support for 76. We thought 78 was going to be support. We thought 84 was going to be support. And to a certain extent it was, right? We went up, what, 25% or something from 84. So we've got some nice movement here, but there are a lot of factors here. A lot of people are like, I see people commenting on Sailor's posts, and they'll be like, stop talking about blah blah blah, fix your stock price. And I'm like, what's the fix? I mean, the market sentiment determines, over 30 days, 60 days, 90 days, sentiment's going to determine the price. I think that's Adrian was talking about MNAV, like market sentiment kind of determines what that's going to be in the short term. But over the long term, I showed this the other day. I mean, if you just, if you zoom out to even 3 months, let's see what that looks like. Bitcoin's up yeah. Bitcoin's up 13. Strategy's up not quite double that. Let's do year to date. Well, there's no year to date on this one. Okay, we'll do a year. For over a year, Bitcoin's up 58%. Strategy's up basically double that. So there's a lot of weird shit that can happen in the short term. Let's do 5 years. 1,000%, 3,000%. So do I sympathize with people who FOMO'd in here and they just can't wait to get out? Like, sure. And even, myself, I've been deleveraging, right? So all of these little bottoms here, I was adding leverage. Every time I sold a covered call, collected some premium, I was stacking the September 1080s. I had really stopped stacking the Decembers at one point, but Well, actually, along the way, I was probably stacking the Junes and the Julys. Now, all of those got completely wrecked because I ended up rolling them. Let's see, July. I rolled my I rolled my Julys like right here. So my July 1080s I rolled here and just took what I could get. And so all the Junes, Junes I probably rolled here. So they all got wrecked. But all of the premium that I was stacking, I was plowing into these risky plays. And now some of these risky plays paid off. And I can't remember how many of these Septembers I had. It was at least 20, could have been more than 20. And so I peeled those off as strategy was making a recovery. It would have been much more valuable if we had some implied vol price action as well, but you take what you can get. So as strategy's price recovered, I got rid of all my poor man's covered calls. I got rid of, some of this short-term leverage. And last week, I even started selling some covered calls against these leaps positions, which are not even in the money. Basically kind of had to turn them into a little bit of a ratio spread. And that worked out well. I mean, this only gave me, 10 grand. And just on today's open, my account's probably down $50,000. So, it's nice that this mitigated the downside a little bit, but there's no amount of covered call selling that can completely mitigate your downside unless you um, pull a Josh in November and he was like selling in the money covered calls, which I've never done. So last week, if I was just super bearish and I sold the price was 400. If I sold like the 385s or something, I could have collected more money in here, but it still wouldn't have saved me. It still wouldn't have saved me. It would have put more cash in my pocket, but it wouldn't have saved me completely. Um, so I'm just going to continue to keep executing my plan. So I'll call this a dip, and it's, you know, you can look at the chart and tell yourself any story. I can say that we're up from 240 and I should be selling and taking profits, or I can tell myself that I'm down from 415 and this is the dip. Um, there's no telling how far this dip can dip, but yeah, I mean, 350 seems reasonable if we get a significant pullback. And of course, the whole market is going to do what it wants to do. So it's always a decent idea to at least just check in on the market in general. And so the market's kind of down a little bit too. And they don't have to trade in the same direction, but when the entire market is trending down, whatever your favorite stock is probably getting pulled in that direction. And if it's not and it's it's going the other way, then that's like there's some serious sentiment in that stock. What would cause me to abandon this position? Like, I would say if strategy traded negatively to Bitcoin for like 60 days, 90 days, that would start concerning me. But I forget exactly how the saying goes. Something like the stock market is in the short term is a voting machine, and in the long term it's a weighing machine, some shit like that. But it's kind of like a popularity contest in the short term. So anything can happen. Long term, if your thesis is correct, you should win. But if if strategy adds leverage with their convertible bonds and their preferreds and levers up nicely, and then we don't get some, and it doesn't start trading like a levered ETF, that would concern me if that happened for like, yeah, like a 90-day stretch, 180-day stretch. That would be a little bit concerning. You should be able to kind of like, 30 days. Not, I'm not, I'm not too worried about 30 days. Bitcoin is up to 17%. Strategy is only up 8%. Yeah, 30 days is not, it's zoomed in a little too far for me. But yeah, I think that's what happened. Some people were looking for any excuse to take some profits in strategy, go jump on the new kid on the block, uh, chasing bigger returns, and good on them if it works out. But I think we're basically just shedding some non-serious investors, which will benefit us more in the long run, right? The people who are not just FOMOing in and out of things will get shaken out of these positions. So, not financial advice, but for the rest of this year, every dip is a buy, in my opinion. That's the way that I will be trading. So let's take a look at the chats, and then we'll get to it. It's a roll day. Aziz covered call party, yes sir. What's up, Richard? Carl, Dookie hands on buying. Exactly. Got to get your hands dirty in a good way. Dude face, this is why we write calls. My in the money 370 expiring next Friday are now looking very good. Exactly. All right, cool. Let's make it happen, Captain. So I sold these for 1,000. I'm basically buying them back for nothing. I'll come back to that later if I want to put some of those positions back on. With this low IV environment, I'm just dying to buy more calls, even though, you know, we're up 50% from the 250, lows where we bottomed out. IV rank is still low, so you can I can justify convincing myself to do what I want to do. Um, if I didn't want to buy some calls now, I could just be like, nah, the price is still too high. But yeah, when the price was 300 a share and IV was low, that was prime, long call buying time. So between those two criteria, at least we've got 1 out of 2. So that's not bad. And my thesis still hasn't changed, right? Strategy is disrupting and they're the clear winner. That's my entire thesis on strategy. And it's built on top of Bitcoin. Bitcoin is disrupting and it's the clear winner. You can make a local argument that MetaPlanet is disrupting and they're the clear winner in Japan. And then, you could have a basket of those. Like, let me pick one. Who just came out in Brazil? And then somebody's got to be managing MetaPlanet style ventures in I don't know, 2 other Asian countries. So, you want to pick one horse from every country, that's fine. But the big, big winner Like, are any of these companies, some of these companies might be able to grow faster in the short term, but are any of them a threat to have more Bitcoin than Strategy? Not likely. So that's what I'm sticking with. There could be other, better risk adjusted opportunities that I'm not aware of, but you can't be aware of everything. So this is basically where I've landed. All right, so these are ready to roll. Sold them for 18. They're worth less than half of that. They've been on for 21 days. Let's go ahead and go for it. And I think I'll go ahead. I could just do the one stop roll, but I'm going to close this one. That way I can just roll all of them at once. Close this one as well. Just going to close them all. All right, yeah, I'm going to have to roll this up, pay a little extra. Pay a little extra pound of flesh. Okay. There we go. All right, so now I'm using almost 10 grand worth of margin, but I'm definitely going to sell covered calls on all of my shares positions. And then I'll come back and decide if I want to sell any covered calls against these leaps positions. "41 days expiration because the July 11ths are not available." I'm going to go to at least the expected move, somewhere between there and probably 1 SD. So I can sell them for 1,200 a pop. I generally like to try to collect 4% of the share price, which would be 12 and 3, $15. So that's right in here. So I think I'll accept a little bit less premium and stick to at least the pick up a little bit more callaway value. To get 16, I'd probably have to roll down here. This is going to be nice as well because I won't have any weeklies. Since I'll be in Vegas next week, I won't have to check my account and like, how are my weeklies doing? I can just not care. So now that takes care of all my margin usage and gives me 10 grand to play with. What's Tesla doing? Tesla's down as well. I had sold off half my Tesla position when it ripped. But I don't think I'm not ready to just like ape into a bunch of Tesla positions yet. Not until strategy just melts up to like 1,000 a share. I don't know if that's going to happen before or after the summer. By the end of the year, whenever that happens, that's probably when I'll really move a bunch more into Tesla. Or if Tesla like suddenly crashed below 250 a share or something and strategy was holding steady, I might rotate some into that position. All right, so I got these covered, and I don't think I want to keep adding September 1080s because there's only 30 days left on them before I'm going to cut bait with these anyway. So going out another 90 days will get me to like December. So these are over 180 days to expiration. That gives me a nice solid 4 months to be right on these. And what do I got? 10 grand. So I'm going to spend 5 grand, 6 grand on 5 of these. Should I spend the other 3,500 on shares? Actually, you know what? I can go ahead and just get 2 more of these because I've got 44 extra uncovered shares here. If the price of strategy drops down to 350, 325, 300, I can peel off some of these to buy more to dollar cost average into these. Yeah, I can get 3 more, right? 3,600. Yeah. All right, that'll work. No buying power to speak of. Um, I've had this on for 2 weeks, but it's worth more than what I sold it for. It's $27 in the money, which means there's 39 minus 27 gets me to 1,200. So there's still $1,200 worth of extrinsic value to collect here. So there's no reason for me to roll this prematurely. I'll just let it cook. Yep, this works. So somebody announced that IMST is paying $7 a share. So I was beating the covered call ETFs over the last couple of weeks, and um, my shoulder is sore from patting myself on the back. Finally, after losing for like 3 months straight. However, so I've got 1,833 shares of IMIST, and once they pay that out, that's going to be like 12 grand. So that's going to definitely put them a lot closer. It'll still be a little bit of a tight race, but if that's what they pay out, I'll be fine. And one thing that I am noticing though is that the only way for me to figure out who's making the most money with the covered calls would be for me to literally just go into all of their positions and see how much premium they collected against their assets under management or against their synthetic longs. And then I'd have to go in and calculate my premiums collected and, and it's just kind of a pain in the ass. And so the other thing that I'm fighting in certain situations, but could benefit me as well, is the MSTY and IMST prices are determined by market sentiment. So, like, they could trade like shit, but if the market is just piling into these funds, it's driving their price up. So, I think it's just easier and cleaner to just compare, the bottom line is what's the portfolio worth? And so I could dig into it and drill down and be like, okay, um, you know, I collected more premium than they did, but their stock price went up more than strategies and it compensated. I could get into all that, but it's a lot less work for me to just at the end of the day, just, look and see, okay, is their account is their account worth more in the end? The combination of the share price plus all of the dividends that they've paid out. If their account is worth more, then they win. If my account is worth more, then I win. But yeah, looking forward to that. And it's kind of a perverse incentive that if I win the challenge, then I made more money on my account, but I also lost money on their account. So I kind of almost hope that they win so I can have more money at the end of the day. Um, so yeah, that'll be a silver lining if the covered call ETFs actually win the challenge. I'll have to uh, I'll have to take the walk of shame, but the silver lining will be that I'll actually have more money than if I had traded all of the money myself. So that's the glass half full view of that one. All right, the joint account. This is worth less than what I sold it for. Let's close that one and this one. I'm using $900 worth of margin now since I paid to close those. So I got to come up with some monies. I'm not gonna sell the same strikes against the shares that I am against the PMC potentially. Let's see how I want to play this. To make sure that this poor man's covered call is safe, I can kind of ballpark it by adding the strike price of the long, which unfortunately is now out of the money. Still working out very well for me. Looks like I bought this damn thing for 1,800 bucks 266 days ago, and it's appreciated so far that I'm actually now able to sell covered calls against it. So that's pretty fucking cool. So that gets me like 466. So as long as I'm selling the 466 minus the premium that I'm about to collect, this should be constructed fairly safely. So I could go back out to the 500 strike again, or I can go a little lower. But against the shares, I can just sell whatever I want. There's no look at this. I've been holding this for 200 days, and it's basically worth what I bought it for, slightly under. But I wrote it up, I wrote it down, I wrote it back up, I wrote it back down. That's hilarious to me. All right, let's do the poor man's covered call first. I said I needed to get to at least the 466 strike, which gets me, well beyond the expected move, gets me closer to one standard deviation. So I don't mind. Yeah, let's just go ahead and sell the 465. That probably gets rid of all my margin just with that single covered call. And so now I will sell a covered call against shares. And I don't mind being a little bit more aggressive with that one. Let's do the 450. And again, so that's 1,400 bucks. Let's, how much were the Decembers? It's like 1,200. There we go. Oh, I already have a 1,200? Or I mean a 1080? Okay. Yeah, so I paid 1,700 for one already in this account. So I can dollar cost average into this a little bit with this cash. All right, now my average cost basis is 1477 instead of 18. So I like that. That probably uses up most of my cash. Again, I've got 51 uncovered shares. If we drop to 350, 325, 300, 275, whatever, I'll peel off some of these shares and I'll start YOLOing into some more of this leverage. Let's see, if I 50 shares, if the price did drop to 300 again, that's 15 grand, right? So I could easily take that 15,000 and buy a leaps and sell and add another poor man's covered call. Let's ungroup. Let's regroup. Yeah. So the 380, yeah, for sure. That's basically the plan. If the price really just takes a dump, I'll just sell shares to buy more leverage. And it's dumping. It's dumping as I speak. Is it my fault? Should I just end the stream early so we can, I'm wondering a little bit about, well, MSTY doesn't have to really cover. 'Cause I don't think they were at risk of anything expiring in the money. But, they do move a lot of volume. So when they add their new weekly covered calls in, I don't know, is that driving the price down a little bit? I have no idea. Waffle Goblins covers that quite a bit. His channel might be worth a listen if you're interested in that kind of analysis. All right, same thing here. I sold the 310. It's $27 in the money. There's still $1,200 worth of extrinsic value here. So I'll at least let this go another week. Probably the whole week I'm in Vegas. I'll just come back the week after, and this will be like, slightly under 20 days. But this will be nice. I can just come back in 10 days and deal with these. I don't even have to look at my account the whole time I'm on vacation if I so choose. I kind of can't help myself though. So, you know, there's no way I'm gonna not know what's going on. All right, the allowance account. This is only, oh, this has been on for 2 weeks. Still got 28 days left on it, but let's just roll it out to 41 DTE. Well, let me check what is. All right, I have to get this constructed correctly. So it's a 350 strike plus 100 gets me to 450. So that's a perfect strike, really. Let me go see what this dog is whining about. Oh, he just wanted on the bed. All right, so I've got 3 grand, but basically 2 grand or close to it, like 1,600 of that is collateralizing this Tesla put credit spread. I'm not sure why Tasty Trade doesn't. It's giving me some kind of margin allowance or something for that. So I'm going to pretend that this is only like 1200 available maybe. Which, imagine that, 1200 is exactly enough for me to get one more December 1080. Oops, not that far. December of this year. Can these get wrecked? Of course they can. But hopefully 210 days will be enough time to be right. We'll see. This looks pretty good. And then the challenge account. I sold one weekly. So let's close that. The value of all of these have basically cratered. So let's dump these. All right. So now this account has a negative theta of 156 because of all of these bad boys. My cost basis on my shares is actually pretty high, 344. But let's go ahead and just add 5 covered calls. Let's do, I'm feeling a little bit of pressure to try to keep up with the MSTY dividends. So I could get a little greedier with this and go to the, because what do? They do 10%, basically 10% a month. But actually, isn't it 10% every 4 weeks? Because don't I do 13 a year? So that's 2.5% a week. Selling the 420, yeah, like the 435 gets me about 1% a week. So to get 2.5 times that, I got to go to the 29, like 3,600. I have to sell this for 3,600. That's selling at the money. That doesn't make any sense. However, I have to account for upside. So selling the 450 strike, even though that's not even 1% guaranteed premiums a week, if we do finish at 470, that's $80 worth of call away value, which is 80 divided by 400, like 20%. So that works out. So maybe that's my game. All right, let's just split the difference between the expected move and one standard deviation. I will sell the 450s. I haven't dug into IMST's positions, but they're trying to collect more upside. So this might be more in line with what they're doing. But that gives me 3,600 to play with. See my activity. What did I sell my September 1080s for? Sold a couple for 11.55. That ain't bad. So if I add a couple more, actually no, I'm sorry. I'm not dealing with September's anymore, right? I'm dealing with December now. So let's go to actually here I got to be careful with this. So I need 27 shares to be able to sell one more covered call. So what's that going to cost me? Or what would that give me if I sold, or how much is it going to cost to get those 27 shares? 9,900. Should have sold all of these fucking things. Over 1,000. That would have been 13 grand. So yeah, even if I closed the entire September position, that would get me 6,600 of the 10,000 I need. So I need 34 more hundred. And I've got 3,600 in cash. The problem is that in this low IV environment, I want to be adding long calls. All right, so if I add, actually I can add one December. If I dump all the if I dump all the Septembers by 27 shares, that means I can sell 6 covered calls instead of 5. That would give me another $1,300, which would let me buy one of the December 1080s. So is that what I want to do? Or do I want to keep all of these Septembers until July? Yeah, let's stick with that plan. So I got $3,600. Damn it, wrong December. Let's buy 36 what? 36.19. I don't think I can buy 3 of them. No. All right, that gives me 1167. So let's just take the balance and buy how many shares I can get with that. 1167 won't get me 4, so it'll get me 3. Cool. I think that's a decent compromise. Now I don't like this. This is barely positive theta. I should have paid attention to that. This is barely an option seller's account because I'm kind of doing what I did last time, just plowing a bunch of money into these. But that's a function of me selling the 41 DTEs instead of a weekly. Selling a weekly, even like way out of the money, would get me, much more theta. So this is cutting it close right here. There's almost no premium being collected here. If this was negative, I would definitely have to undo a couple of these positions. Oh man, it's holding on to positive theta just like by a string. That'll be fine. That will be fine. All right, let's check the chats. Check the 5K challenge account. and then call it. Dude, please, I've been rolling weeklies since the last run up to 410. Nice. Grats on that one. DFD, the first. How do you go about call spreads, comparing them to just straight long calls, especially in these conditions? So I've all but given up on spreads with strategy because the bid ask spreads are just horrendous. So it's a more efficient use of capital. And if I was gonna set one up, I would probably, I'm bullish, so I'm just gonna set up the put credit spread side. So I would go to like the expected move. 300 is a nice round number. Boom. I'm just gonna do this for easy math. I'm gonna do a $10 wide. It doesn't matter if you do 5 wide, 10 wide, 20 wide, uh, whatever. But this is gonna be easy math because since it's $10 wide and the delta is 16, this is just ballparking like the Kelly criterion that gamblers use to decide whether to make a bet or not. It has to be like, a positive bet that will win them more money more often than not. So if delta is accurate and I'm going to win this bet 84% of the time and lose it 16% of the time, then multiplying the delta times the $10 wide spread leaves leaves me the dollar amount that I would have to collect here to make this worth my time. And since $10 wide spread is $1,000, that's 7.17 times 1,000. So as long as I'm collecting $170 worth of credit here, this makes sense, at least from a purely objective mathematical standpoint. Um, but just keep in mind, delta is an estimate. This is just kind of like a prediction. This is probably related to black shoals or whatever. So this is just all like educated guessing, like mathematically guessing, I suppose. Um, if I used the in the money percent that Tasty Trade is using here, then I would need to collect at least $230, which would not be worth my time here. But regardless of whether this even makes sense or not, I still have to get a fill. And you can see that the bid ask spread on this is all the way from 155 to 260. So it's like a dollar wide. So like I probably wouldn't even get a fill at 207, like maybe. Um, I'd have to keep walking this down to get a fill. And then I got to do the same damn thing on the way up. I'm getting like, oh, cool. Let's say I can buy this. It's saying I can buy this back for $1, right? I sold it for 2. I buy it back for 1. But like, what if I have to keep bumping up the price and bumping up the price, and I end up paying like 125? So it looks nice that I could sell this for 205, but what if I only get a fill at 175? It just starts getting kind of annoying. I know that strategy is highly traded. You can get a fill, right? You're going to be able to get a fill. It's just going to be a matter of, are you going to get kind of raked over the coals on this bid ask spread? So that's why, not that account. I accidentally sold this Tesla spread the first time. I thought I was selling it in strategy and I was like, wow, the liquidity is really good. But I actually had Tesla selected. And I've just stuck with it because the bid ask spreads on Tesla positions is just so much better. It's way tighter. And if I do a similar exercise, let's go to, yeah, let's sell the 1080, buy that one. The bid ask spread is only 45 cents wide here. And the prices of the stocks are fairly similar. So this is much more liquid as far as the bid ask spread is concerned. I would still perform the same kind of check. I would need to collect at least $150 for this to make sense. It's trading at 167, so something like this would at least be worth my time. And I have bought some debit spreads in the past, but I've taken them all off. Some of them were profitable, some of them weren't. They're always going to be more capital efficient. Like if you have a smaller account and you don't want to buy, you know, if you don't want to buy a 1080, you can buy the 10 and sell the 1020. It's still going to cost you more than it's going to cost you more in the debit than it is that you're collecting on the credit. Um, and so you'd be spending what, whoops, like 25 bucks to potentially win, $1,000 bucks. So if you win this bet, it's more capital efficient, right? I could get for the price of $1,200 for 11080, I can get oh God, I can get five. That costs me 100 uh, times 12. I can get like 60 of these or something. I can get like 50 or 60 of these for the price of 11080. Um, and to win that 1080, like for me to 10x on that versus what, like spending 20 to potentially win 1,000, is that a 50x? Yeah. So, but again, the bid ask spread on this is 50 cents wide, which is like the same as the bid ask spread on a much more liquid position for Tesla. So I have done this, but I just don't like strategy's liquidity. So even if it makes mathematical sense, liquidity is probably the second most important piece of information beyond position size, which is kind of rich for me to talk about when 90% of my position is in a single stock and I'm talking about position size. But, you know, that's what wise people will tell you. So, not financial advice for me. Let's see. Boeing Hitman, you bought cooler leaps for 2027. 50 Delta strikes. Nice. Total gamble. Yeah, I've been trying to convince myself because it's so fucking cheap. It just seems like a no-brainer to just take a fly, not Kluwer, cooler. I tried to this was so cheap. I was like, can I find a way to like run the wheel on this thing? But yeah, the bid ask spreads are just hot garbage on these for such a cheap stock, not terribly liquid. Um, what would be selling? Yeah, if I tried to sell there's no market here for what I do. But what'd you say? Where'd you went out to? Leaps 2027. Yeah. But to go out here and literally, let's see, you went for the 50 Delta. That's probably going to be, yeah, not too far. But I mean, these are so dirt cheap. Like this is people spend this in a year on lottery tickets. So I think it's much more likely that somebody would hit on a Bitcoin derivative lottery ticket than they would actual scratch offs. I will say this. I think it was cooler that had some kind of like bodysuit that, like, help you pick shit up? Hope I'm not. I don't know. I really don't do here it is. The world's most exoskeleton. Yeah, so they got some kinda, like, exoskeleton thing, which I kinda just feel like unless it's just way cheaper than what Tesla's gonna be selling their Optimus robots for, I'm not gonna need an exoskeleton. I'm just gonna be like, "Yo, Optimus, pick that heavy shit up." So, I'm not convinced on their business exactly, but if they're like, if they're this cycle's altcoin, you know, dirt cheap, call option on FOMO and Euphoria, this thing could pump, and it's so cheap, it's like, you know, $50. If I have to light $50 on fire, like, big deal. So definitely rooting for you. Andre, is your overall covered call strategy similar to Hermes 10 to 15 delta with 30 or 40? In principle, it is, but he's got a major hard on for the 10 deltas, and I don't really care about the delta. For the most part, like, okay, not cooler. So the ones I just sold were the 0.27 delta. Some people lock in on 30 delta. Some people like 20 delta. Hermes likes the 10 delta. He likes, all of this stuff up here. The advantage to what he's doing is, let's say we do get a run up to 525, he can just sit on that and then roll it out, you know, to 575 or 600 in a month. So he's got a lot more wiggle room, whereas I'm going to start feeling the pressure at 450, right? But I just don't mind the pressure. Um, and the reason is because of these long call positions that I've been stacking, right? If I have to pay to roll a 450 for a debit, I'm going to use these long calls to pay for it. I'm going to use these shares to pay for it. So I've got some uncovered positions, and it might be one of those 6 of one, half dozen of another type of thing where, um, he's collecting a smaller premium so that he doesn't have to feel the pinch when this runs up. And like even when we ran up to 415, you know, he was bull posting like, look, my 525s are good to go. Like, I'm not even sweating it. And so I think that's very appealing to some traders. I'm totally on board with his strategy, right? I just um, when I got bills to pay, right? And I start writing checks to the mortgage companies or whatever, I just look at my account and I'm like, okay, how much money do I need to collect? If I need, um, well, I got 1,500 shares in this account, right? And I just don't believe that there's a perfect delta. There's no perfect strike. There's going to be pros and cons. There's going to be advantages and disadvantages for every strike, every days to expiration. I think they're all priced correctly, and it's just what what kind of trades are you comfortable dealing with? Like, what is your goal, and does it meet your goal? So for me, if I've got what did I collect here? I think I had to pay 10 to roll these, and I collected another 10 on top of it, I think. So if I needed 10 grand to pay my bills, then I'm just gonna sell whatever strikes I have to sell to pay for it. It's really it doesn't have to be complicated. Everybody wants to know what deltas to sell. But, if I can't pay my bills with the 10 deltas, then I can't sell the 10 deltas. Like, I literally have no choice in the matter. Um, but at the same time, if he sells if he sells one of these for 500 bucks or, 10 of them, that's 5 grand. If he wanted to buy the December 1080s, he can only buy 4 of them, right? 4 of them is gonna cost him 4,800. So, he can collect 5 grand here on 10 covered calls, and then he can spend that 5 grand however he wants. But in my situation, if I'm selling 10 covered calls at the 450 strike and I collect 1,400 bucks a pop, that's 14,000, which lets me buy, 2.5 times as many of the December 1080s. If the price runs to 450, then I won that decision. If the price runs to, where was it? Whatever, 550, then he will collect an extra $100 of callaway value on this part, but do my, what, 14 grand, 1,200 a pop, will the 10 or 12 December 1080s make up for the upside that I missed out here? I don't really know. Boeing says 100% maintenance requirement, so don't even want the shares. Was that with Cooler? Yeah, we're still talking about Cooler. Why is strategy better for covered calls than, say, iBid? Is it because you prefer owning strategy shares for upside? Um, it's better in basically every single way, except you could kind of make an argument for iBit on a poor man's covered call. I've highlighted this before because I was desperate to try to find something that made sense to trade iBit. So, like, if I wanted to do a poor man's covered call, let's answer your question first. So let's just be very aggressive. Like, if all I cared about was covered calls premium, and I bought 100 shares of one versus 100 shares of the other, and I'm just going to sell an at the money covered call against it, and I'm just going to try to juice this thing for as much as I can. So I got to come up with 6,100 bucks, and I could sell, just being kind of a premium whore. That's about 2.5% return on capital, right? I got to put up 6 grand in capital, and I can collect $1.57. 1% of 6 grand would be 60, so double that is 120. Half of that gets me to 150. So 2.5% return on capital for 1 week. Actually, with strategy's position, it might be kind of close now. So collecting 1% of 375 would be $3.75 times 4. You know, we're still able to get like over 4% return on capital, right? Spending $37,000 and picking up 1,200 bucks in 1 week. The advantage is definitely to strategy. Strategy just paying more premiums, even with, like, Ivy rank on strategy is just bad right now. Actually, um, for Ivy rank, Tasty Trades kind of like benchmark is, if Ivy rank is at least 25, you're kind of like, okay, we can consider this. So this is actually not bad right now. Um, but let's evaluate, like, okay, say I'm not just looking for premium and I want maximum upside. why is there an expiration 3 days apart? Are they doing multiple expirations per week? 38 days and 41 days is only 3 days apart. June, is that because of the 4th is a Friday, so I understand that it's closed. But this one too. June 27th, 6th and 13th. So are there Monday and no, June, that's only, yeah, the difference in this 21, 21, 21. Okay, I don't know. This is confusing to me why I can choose June 30th, which is 3 days after this expiration. Like, why is this here? Why is June 30th available? Seven, 14, 21, 28, 35, and then I get 38, 41. So what is up with this June 30th expiration? Why is this here? Anyway, uh, bewilderment ensues again. Bottom line, let's go to 41 days to expiration, and let's go 50% of that would be the 90. So let's go like 25% out of the money to like the 75 strike. I can get 1.5% return on capital for premium, 25% out of the money. Let's go 41 days to expiration, 25% out of the money. Let's see, on $400 a share, that would get me to 500. So let's dial that back by like 20 bucks. So like the 480 strike. With the 480 strike, I can pick up $10, which is about 2.5% return on capital for the same percent call away value. So the premiums are better with strategy. That's basically what I'm trying to illustrate here. But going back to what I was originally saying is that I'm going to remember this. So the 75 call. In order to construct a poor man's covered call, you're buying a call and selling a call. So low options premium is an advantage for buying the leaps. So this is the only way that I was able to figure out how to like construct an IBIT position. Yeah, 76 delta. So if I wanted to like buy the $50 strike and sell the 75, I'm getting this cheap long call. If I went out to, what was that, December or June 18th, right? And I want to buy something, what was it, the 0.75 delta? Let's go 300 strike. Yeah. So I can get paid more on the covered call, and this is going to work out to about, let's see, 1% times 6. So like 6% return on capital based on the share price, maybe 7%. And then here I'm getting like 4%, 4.5% return on capital, spending 2 grand to collect 90. So like this is kind of a little better, I suppose. Like I'm not collecting as much on the covered call, but I'm paying less for the long. So if I wanted to do something like this and I only had 2 grand and couldn't afford to do something in the strategy world because it's going to cost me $15,000 to buy to buy the frickin' leaps, um, that might make me do something like this. But just buying the straight shares, like I bet covered call premium cannot handle hold a candle to strategy. But I do think the upside is better as well. To answer the second part of your question, Boeing 10,000 into Metaplanet shares with a trailing stop. Yikes. Swoldemort, can't believe how well my covered calls and short vol positions printed this week. Really thought I'd be eating losses with Bitcoin at 110. Yeah, exactly. You just can't. Like the market is irrational. That's one thing. People keep posting like, why is strategy trading this way? Why is it trading that way? I thought this was supposed to cause that, and we own more Bitcoin now because the market in the short term is irrational as fuck. The buyers and sellers are free to do whatever the hell they want with their money. And if Bitcoin goes up, people who own strategy shares can still sell it and drive the price down. So there's just nothing we can do about it except wait and hope that it smooths out in the future. Or exit your position and go to cash and find something else to trade. Dude, face your 370 is now out of the money. Oh God, is it? Did we dip below 270? Fuck. Okay. Let's see. Would Josh close his long calls and take profits rather than exercise if he were in a tax advantaged account? Exercise. I don't have the slightest idea. Um, every once in a while I try to read the tea leaves on the way that Josh is trading, but you'd have to see if you can get a good answer out of him. I can't speculate on what he would do in that situation. Steven, note IMST dividend was for 2 months, I believe. Yeah, exactly. So it'll be interesting to follow and see how much they start paying month to month. What's up, Onan? How do you evaluate how much of your margin you want to lean into when buying positions that you then plan to sell calls against, if you have any standardized guideline for yourself? So I'm not even using margin anymore. I've been trying to keep this positive. Yeah, they're telling me that I can buy $600,000 worth of fucking positions if I just wanted to be margin to the gills. I was using margin through most of 2024, but when we got the November pump, the only thing I did right was sell. Well, I took enough profits to no longer be using margin. Yeah, I mean, you kind of have to figure out what your exchange's margin rules are, because some of them are going to give you a 50% margin allowance on a particular stock. Some are going to give you 75%. Tasty Trade also has a concentration risk. So because at one point 100% of my position was in strategy, they wouldn't give me as much margin because I was just they could not fathom why I would take this much risk. And the other thing is that strategy has their default margin requirements, but then 3 days prior to earnings calls, they increase the margin requirements. So I was trading my margin what I thought was very safely, and then I woke up the next morning 3 days before earnings, and I was dangerously close to a margin call because they increased the requirement. Now, I think that actually proves sort of that I was trading margin responsibly because even under their increased margin requirements, I didn't get a margin call, but it just made me a little bit too close for comfort, and I had to play a little, I had to play some little tricks, by buying some puts to de-risk the account. Didn't cost me much, and I only had to hold them for 3 days, so it was fine. I basically rented some puts to trick the algorithm into letting me own, 100% concentration risk and strategy. So you kind of have to like figure out what their margin calculations are and then imagine what's the worst case scenario it is for the stock that you're buying. Like anytime we know strategy could go to 250 again. We know it can do that in a month. So if you use enough margin, so much margin that you're not accounting for how far it can fall, then you can get liquidated. You can get absolutely destroyed. Um, and I'm not like the richest person in the world, but it was enough for me to be able to quit. So the fact that my family's uh groceries hang in the balance, I was no longer willing to risk using margin to squeeze out an extra 10% returns, right? Uh, liquidation risk was not worth it for me at that point, but I was YOLOing a little bit, somewhat, I thought somewhat responsibly through 2024. Um, and if you've got dry powder other places, like, if you got a margin call and you could pull, like I was also calculating like, I had a HELOC on my house, and if I ended up on a margin call on my trading account, I could pull like 30 grand off my HELOC with a press of a button to pay for it. I could crack open my cold storage Bitcoin. So it all just depends on what dry powder or what glass you can break in case of emergency to cover a margin call. And you'll have to, basically figure that out on your own. How far you think strategy and Bitcoin could crash. And if you did get a margin call, what could you do about it at that point? Might want an exoskeleton for hobby purposes. Hiking, rock climbing come to mind. Can portage in a ton more gear and get to places you couldn't before. If it finds a hobby niche, one could argue it would have a higher margin as well. Just speculation on my part. Yeah, absolutely. It would be super for one of the things that I did. My best friend from the Navy, he wanted to build a retaining wall in the back of his property, and so we probably had they we, different blocks. The heaviest ones I think weighed 80 pounds. So I think we had 80, 40s, and 20s maybe for the different sizes. I don't know. It was like 10,000 pounds of stone we moved from the pallet to his truck and then from the truck to the wall. And so we had to do that twice. So I don't know, 20,000 pounds of fucking stone we moved in a day. And I would have given my right arm for one of those exoskeletons. But like I said, I'll just tell Optimus to do it. He can go plug himself in when he gets tired. So Joshy, with the potential front running of S&P 500 in July, I prefer lower delta nowadays compared to say a couple of months ago. I prefer lower delta. Lower delta on the covered calls or your leaps. I've been rolling out my long calls to at least December, January 2026, like you've been doing also. Okay. Yeah, basically anticipating that we could get a run, right? I wish Sailor can start leveraging up heavily, announcing more convertible bonds to attract investors back in. I agree. I think we're not leveraged enough. But I'm excited about the ATM on Strife, I think that they just announced. Um, and it's gonna be much we're gonna be able to buy Bitcoin faster and with less hassle, and we don't have to worry about the fucking arb, the bond arb traders buying the shares, hedging the shares, fucking up the price. Um, they're just gonna be able to let the preferred strikes and stripes run. They're just gonna run the ATM and they're gonna buy Bitcoin with it. And that's gonna pump up the debt levels, right? Every time they hit the ATM on the preferreds, they're increasing their debt because that gives them a dividend obligation. Um, and it's a wonderful thing that they have those levers that they can pull instead of going out, meeting with the bond market, figuring out, oh, this is what they're willing to pay. Okay, we'll adjust our offering, and then is it going to be a 0%? Is it going to be a 1%? Is it going to, what strikes on the thing? And just dealing with all that bullshit. Um, but Strike and Strife is just going to allow them to uh, just start siphoning money, and and you know if they want more leverage, they just hammer the ATM harder. If they want less leverage, they can hammer it less, and then maybe hit the common stock ATM again. When we double. I think the best. So um, Jeff covered the preferreds last night, and he showed their infographic of the gears, and I really like that one. So there was 3 gears interlocked, and the ATM percentages on the preferreds was like double that of the common stock ATM. So they're not going to stop the ATM on the common stock shares, right? On strategy. It's just that the ATM that they're running on the preferreds is going to be like double that. So they're going to be able to lever up, delever. They're just going to have a lot of flexibility. So I'm bullish about that. Retaining wall, throw boulders, exactly. Yeah, so lower delta on your covered calls. Yeah, exactly. I think that's a reasonable thing because, IV rank is low. We could be getting the S&P 500 front running, when everybody starts to figure it out, and when we get levered up, this thing could take off like a rocket. Not to The only thing that's got me a little spooked is like, and maybe it's a superstition, but I think it's true most times, right? Is the sell in May and go away thing. It's like, will the tariff pause end right in the middle of summer? There's not as much liquidity. Everybody's kind of like packed up for the summer and is not pumping our bags, and like I'm torn. I'm torn between wanting to sit on the sidelines for the summer, but also like totally bulled up about S&P 500 front running and levering up and Bitcoin. It's just, you know. So I think the bottom line is I'll just keep doing what I've been doing. I'm going to sell short-term volatility under 45 days of expiration, somewhere between 7 and 45, and anywhere between 7 and really like 52. Um, and I'll keep paying my bills, and then I'll leave some upside in there, and whenever I can scrape together some buying power, I will YOLO into the 1080s or the somethings. Um, Grain made a pretty good case for the slightly out of the money calls so that you can ride the gamma curve. Um, I got no complaints with that strategy. Um, the only thing you just have to keep in mind is like, what's your plan, right? So if I buy, and we talked about that during the Q&A section at Strategy Worlds, excuse me, the MSTR True North World at Strategy World. So, like, let's look at a leaps. If I'm buying a 10 to 20% out of the money, let's just go to like 450, right? If you buy this and then it goes $75 in the money, so I buy it for 10 grand and now it's like maybe it's worth 15 grand, 15, 20 grand. But, now the price is like 525 a share, but like maybe it's going to 750, maybe it's going to 1,000. So now you have a secondary decision. Do you take profits in this and now roll out to the 600 strike or the 650? Like at some point, you have to decide when you're going to finally take profits and either go to cash or go to straight shares or something. So, yeah, it's not that I hate on the 10, 20% out of the money long calls, which actually these 530s that I'm still holding on to are basically in that category. So these might be ones that would be I would be looking to buy if I was going to participate in that strategy. But then I have to decide like, okay, if the price gets to 600, 650, now they're deep in the money. Now I have diminishing returns. Now what do I do? For me personally, I would either sell some of them or start selling covered calls against them and turn them into poor man's covered calls or some combination of the two. You know, maybe I sell 10 of my 20 and then I sell 10 covered calls against the other 10, something like that. But again, I don't think there's any perfect strike, right? So you can buy the 530s, you can buy the in the money ones if you don't. I mean, if you prefer to buy to buy those are even a little bit safer, right? But you're probably not going to be able to 10x buying an in the money call, right? If you're buying the 300 strike, uh, the 250s or the 300 strikes in June next year, it's going to be very difficult to 10x that position. So there's always trade-offs. Thomas Sowell said there are no solutions, only trade-offs, and I think that's true for every single strike and every single expiration. 100% ATM on strike and strife feels so much better for the common holders. I think now they finish testing the water and see how much the market is willing to jump in. Credit rating will be the main factor that drives strife up for the ATM and buy Bitcoin without dilution. That's the dream come true. Yeah, I think so too. Getting rated is gonna be huge. I just texted my my mom the other day. I was like, Strife's paying $10 a share, which works out to about 10% dividends a year. And she's like, "Oh, nice." And I texted back, "Nice for you, too too safe for me." She's very skittish. Like, um, she actually took her she took her fucking retirement out when COVID hit. She took it all out and went to cash, and it's been cashed ever since. And I've been beating my head against the wall think every time I think about it. So desperate to try to get her into something. It's kind of wild. Big Whale are picking up leaps also. I saw one picked up 5 million worth of June 2020 or 2026 400 calls. Hells yeah. Yeah, it just makes sense, right? I sold off a bunch of my calls because I was way over levered. I guess, yeah. You know what? These were worth like $60 yesterday, the day before. So these damn things have collapsed almost 50%, like at least 30% in a day. Um, and compared to how much my overall account value is worth, this is still a ton of leverage. Like, having this much leverage really does not make sense most of the time. But in the long term, I'm really not worried. There's some short-term heartburn for sure, but I just don't want to. I just don't want to end up a Dookie hands investor. Let's see. You can see signs and clues that people are already front running, anticipating S&P 500. So I'm doing the same thing, selling short-term vol while stacking safe long-term calls. Yep, sounds like we're in the same boat. All right, cool. Oh, I did. Do I do the? I don't think I really looked at the 5K challenge. All right, I've got 9.5 puts. These will be assigned. Price on it's like it's under $9, right? Yeah. So I will own 300 more shares over the weekend. I could roll them, to next week for a credit. I'm sorry, probably for a debit. I mean, but it really just doesn't matter. I'll just run the wheel on this one. Uh, okay, we'll have to deal with this one. So my 425 June 20th, I sold it for 38 and it's only worth 13. So should be time to roll this position. Let's go 41 DTE. What can I get for the 425? I can get 1800. I forgot what I'm selling this against, though. To make sure this poor man's covered call is safe, I need to sell at least 250 plus 150. I need to sell at least the 400 strike, so this is fine. I can go 425 here. Surprised that filled. All right, so sold that for 1900. That gives me 500 bucks to spend, maybe. So I've got 4850 in options collateral, which would what I'll be using to buy these. Well, that's only half of my collateral. Oh yeah, I sold these 627 puts. Me and my brother-in-law are copy trading these. So that's being held in collateral. But this, let's see, 5800 minus 4850, it's like 950 in cash. So I can sell a riot put. Do I not own any shares of anything? These are all just puts. Okay, so I'll own 300 CLSK shares over the weekend. So let's sell like one riot put for next week. And I'm just going to be aggressive with it. I'm just going to sell the 850. This is about at least 3% return on capital for the week. I'm going to have to roll this down a penny. Annoying. All right, it sounds like that's pretty much all I can do. And this is kind of, I think, what the ultimate goal should be for someone who wants to reach critical mass. Like the power of compound interest is that, let's just say you own Strife, right? Or one of these Misties, IMST, whatever. They pay you the 10% dividend, and then you just buy more of the shares. and then you get a dividend on those shares, and then the next month you get a dividend on those shares, and it's just, you can basically go to the formula for compound interest is like, let's just say these covered call ETFs do pay 10% forever in perpetuity, right? If you buy shares with the 10%, then you just take 1.1, raise it to, whatever power. It's going to be 12 for 1 year. So let's see what that turns out to be. It's going to be like 100%. Okay, so you can 3x your position. Yeah, 10% a month, reinvesting the profits will 3x your portfolio in a year. And so, no matter what my account size is, that's what I want to be doing. So I just collected premium here, right? Collected $1,900. I had to pay whatever, I had to pay 12, but I collected $1,800 here. That let me have enough buying power to then sell this put and collect another 3% on top of the percent that I collected when I sold this thing. So it's just reinvesting the premiums and reinvesting the premiums. And if you can get yourself to where, like, let's just say you collected 1% return on capital, if you've got 10,000 shares of a stock, you can sell 10 covered calls, right? But selling the premium for those 10 covered calls allows you to buy another 100 shares of the stock, and now you can sell 11 covered calls. And then the next week you can sell 12. And the next week you can sell 13. Do I have that right? 10,000 shares? How many zeros is that? No, sorry, that's 100 covered calls. So you can sell 100 covered calls, and then the next week you can sell 101, and then the next week you can sell 102, then you can sell 103, 104. That's kind of when you reach critical mass. If you're getting 2% return on capital a week, which is not hard to get in strategy and some of these mining stocks, now you only need 5,000 shares to go from selling 100 covered call, or excuse me, 50 covered calls to 51 to 52 to 53. Yeah, rotating the profits into more covered calls is how you get these kind of compound interest type gains. All right, let's get caught up on the chats and then we'll call it. Thanks for the day, Nithu. Have a safe flight out to Vegas next week and have fun. Thank you very much. Onan, for what it's worth, I'm not seeing a June 30th expiration on Fidelity. Okay. So that might be something weird going on with my exchange right now. By the way, when Hermes Lux says 10 delta, am I correct in mapping that to 0.1 delta? Yes, that is absolutely correct. Sanity check for the ADIQ, yep, that is absolutely correct. Sometimes we'll say the 0.1 and then 10 delta, because everything in options is times 100. So the 0.1 delta, it's the contract is for 100 shares, so it works out to 10 delta exposure. And that's kind of the way to remember it. So yeah, so this particular option is 0.15 delta, meaning your price action is 15 shares. So it's 0.15, but it's options, so it's times 100, so that's a 15 delta, meaning if you owned 15 shares and the stock price went up $1, then you'd make $15. Or you own one of these options at 15 delta, and if the price of the stock goes up $1, you'll make $1 on this contract. So this is just a proxy for, how much profit would I make if I actually shelled out 100% of the money for shares instead of just shelling out part of the money for a fraction of the the share exposure. Steven says premium in minors sucks. It's not that bad. At the money covered call, three and basically 3% return on capital for a week. It's pretty risky, but 3% of the week, even if you're not reinvesting the profits, is 150% returns for the year. If you do reinvest that, let's see, 3%, 1.03. If you own 10,000 shares of the miners and you got 3% profits for the week, now I got to raise this to the 52nd power. You could 4.65x your account if you had 10,000 shares of, actually, you wouldn't even need 10,000 because this is 3%. You'd only need 3,333 shares to reach critical mass on Riot. So 3,000 shares, that would be 30 covered calls. So, or 30 cash secured puts, whatever. All right. If I sell 30 of those, I'm gonna get a 778 credit. I'm sorry, 33 of these. 33, 34. Yeah, 33, just enough. I'm gonna get 856 credit. That's gonna give me enough collateral to sell the 34th one and get an extra 25 bucks. And then next week, I sell 34 covered calls, pick up another 850 bucks, and sell a 35th covered call. So I can sell 34 this week, 35 the next, 36 the next, 37 the next week. So, I mean, these premiums are really nice compared to, the Apples and the AT&Ts of the world, right? I'm not selling covered calls on fucking Ford. But yeah, I mean, compared to strategy, everything sucks. So there's that. J Digital, the compounding would be 1.1 per year, not monthly. That would be insane. Would be all in at 3x of principal every year. I don't think that's correct. Because they've been paying 10% in a month. I know, because I got paid. So that's how the formula works. Whatever the period of the compounding is, right? If it's 10% in a month and it happens 12 times, that's 3x a year. Especially if you're red. I forget what we're talking about. Oh, the premium and minor sucks, especially if you're red. Let's see, that compounding on Strife, etc. would. Oh, I'm sorry, Strife. Yeah. Yeah. When I was saying 10% a month, I was talking about MSTY. But yeah, so for my mother, I told her, look, if you put 100 grand into Strife, I think it was I can't remember how many years, it would be like 250 grand. So like 100,000 times 1.1. Let's do 10 years. Yeah. So I told her, like, look, 100 grand would turn into 259,000 in 10 years. Instead of it 100,000 being 100,000 in 10 years, and fucking inflation is through the roof. So yeah, my bad if I said Strife. When I was talking about 10% a month and getting 3x returns in a year, I meant on a covered call ETF like MSTY. So my bad if I said wrong things. Onan, so when you say you don't exactly subscribe to what he's doing, it's just a matter of adjusting your risk factors on DT and strike that you're willing to tolerate for covered calls. Expose yourself to lost upside and how much you believe you'll get a re-entry chance with the sale proceeds to wheel back in. Yeah, I mean, I completely subscribe, meaning like it's a completely valid strat and it's working well. Um, I just don't think that there's any bad strikes. So yeah, everything that you said, if you want more upside, then you get a smaller delta. If you want to collect more in premium, then you gotta you gotta pay for it. But yeah, I mean, I totally co-sign his strategy. I'm just a little more aggressive with the strikes, and I don't mind being wrong more often, I guess is kind of the point. Let's see, dude face. I'm shocked. Been rolling for weeks now, and I'm in profit again on the call. I'm still gonna wait on it, but that original right was 5,600, so I'll take it. Nice work. Let's see, 100,000 in Bitcoin will probably be a million in 10 years. Yeah, dude. If you don't understand how much trouble I've been having just to get her to take some extremely safe position like this, let alone talking her into fucking buying Bitcoin. Like baby steps, man. There's no fucking way. But I agree with you. We're definitely on the same team. All right, thanks everybody for tuning in. We are all caught up on the chats, and 750 people watching is kind of wild. I think that's a high for me for a while. People must love the roll day or the Dookie hands or both. Y'all nasty. All right, be good, y'all.